Thanks for tuning into Countdown on Bloomberg Quint with me, Neeraj Shah, Darshan Mehta, and Navneet Saluja. And we couldn't have asked really for a better day or a better week, really. 4 days and good gains. I don't think we would have hoped for more, this or more.
It is. It's been a good day, but I think it's important we point out what the contribution is, because it's very, very limited or stocks that are actually driving the rally today. I think Reliance has to be the talking point of today.
You bet. Navneet?
Yeah, yesterday it was all about TCS. Today it's Reliance, and let's not forget the rally has been polarized. Yesterday we were mentioning 50% of the gains needed that we've seen of 1,000, 1,050 points have come in just from 5 to 6 stocks.
Yeah, and we'll get in a guest to speak about this as well. Quickly, some idea of what the markets are doing. So about 0.8% higher for the Sensex and the Nifty. The Nifty bank about 0.75%. Mid caps and the small caps. I think the market breadth has converged. In fact, look at that. The mid caps and the small caps are down, and the number of declines are higher than the number of advances as we speak. So that's a bit of a worry. But very quickly, just 2 or 3 names. Reliance Industries shining out. Oil marketing companies doing okay, the likes of BPCL, HPCL and IOC, and some gains to HDFC, Bajaj Twins and Yes Bank. So that's essentially what is driving the markets higher. Few losers, the likes of Bajaj Auto, Infosys and maybe a UPL. Darshan, what about the mid caps?
Yeah, so on the mid cap side, there are certain stocks that I would want to highlight. First of all, in terms of GMR Infra is one of the stocks, it's one of the top gainers on the FNO. So that's up almost 5%. The crude impact is definitely being seen on the oil marketing companies. No doubt they've come off the day's high, but nevertheless, all the 3 oil marketing companies are trading with gains. Some specific stocks I want to speak about are stocks at 52-week low. Look at Vedanta, which is at a 52-week low. There's certainly some heavy selling that's coming in on UPL, which is at a 52-week low, and Tata Power is at a 52-week low. So there is enough selling pressure that's happening on all these counters, and some of the counters which have managed to fall right now: Vedanta has fallen, Grasim has fallen, and Asian Paints. These are the 3 counters which have managed to fall in trade currently. But Navneet, anything on the FNO side?
Well, yes, on the FNO side also we've got stocks like Reliance which are doing well, and Infosys has seen some bit of fresh shots ahead of its earnings season. So a lot of stocks actually moving around, and trust me, today is the day which has belonged to the large cap stocks. Also just watch out for United Spirits. That's been down for the 3rd straight day. Some fresh short positions have been seen. Nevertheless, if you look at overall markets, Nifty's come off nearly 45 to 50 points from the day's high level. But not to forget, and Sensex did hit all-time high levels in today's session. So let's bring in a market voice. Vaibhav, Sanghavi, co-CEO at Avendus Capital, joins us on the show now. Hi Vaibhav, good afternoon, and thanks a lot for joining us on this historic day when Sensex touches all-time high levels. Tell us, what have you made of this recovery that one have seen since the end of March, when the index had actually fallen a lot? It's so far been a polarized rally where only a handful of large cap stocks from HDFC Twins, you name it, Reliance, TCS have been contributing. So broader market still reeling a bit under pressure. What's your market prognosis at the current stage?
No, as you rightly mentioned, right, the rally has been concentrated to very few pockets. The reason why it has been happening is we need to understand both from the global standpoint and the local standpoint as well, in the sense that from a global standpoint, it is an environment where we are looking at higher interest rates, withdrawal of liquidity, pressures because of this whole trade wars, and subsequent pressures on metals and commodity prices as well. So because of which, what we are seeing is as an environment which is relatively taking risk away from their deployment. And in a sense, it means that money is going to get pulled out from the emerging markets, which we have been seeing in the last 2 to 3 months. Now, in all this backdrop, and if you combine that to what's happening into local side, in terms of the technical parameters like recalibrations of schemes, because of margin pressures, looking at the mid and the small caps, getting into some performance issues, it is an environment where the broader market is going to continue to, underperform. Having said that, they still are at a premium to the large caps. Now, historically, we have seen that mid caps in long back were trading at sizable discount to the large caps. Here, they are still ruling at sizable premium to the large caps. So there is some way more to go before it stabilizes in terms of the broader market. In terms of the result numbers, I think the first half of the result season is always good. And that is what we would generally see, the market being a little buoyant in the first half of the season.
Okay, good afternoon, Vaibhav. Overall, as a fund, what is the strategy that you are adopting at this point of time? Are you all investing, or are you all pretty much sitting on cash? What are you recommending clients? What are you doing at that point of time?
Sure. In terms of our fund, we being a long short fund, we have the liberty of taking positions on both the sides in different sectors and different stocks. So for us, it's a market, and it's giving us opportunity where the performers are something which we say, for example, for long we have been consistent in saying that we are bullish on consumers, both staples and discretionary. We are bullish on IT, marginally in terms of pharma, in terms of private banks and companies which are focused on the rural side. Whereas what we are not so positive on is basically, one is metal and mining space and companies with relatively higher debt, because in an environment where you will start to see interest costs going up, those are the pockets you would not want to be as an investor. So for us as a fund, it's a good time where we are able to get both opportunities on both the sides at this point in time.
Vaibhav, one pocket which you've also mentioned that you guys have invested into is the IT pack. The Nifty IT index has outperformed on Y-to-D basis. What's the reason? We did get TCS numbers yesterday. Tomorrow is the day when Infi comes out with its quarterly earnings. Is it lack of opportunity, Vaibhav, in the market because the valuations of these companies are still slightly on the higher side, or there is a fundamental reason behind which the money is now flowing into IT pack? Are you seeing any sort of convincing recovery? Obviously, TCS numbers were quite convincing.
No, of course. I think, while we make a decision, there definitely has to be a very, very strong basis on in terms of the fundamentals on what we take into the portfolio. Having said that, what we analyzed probably a year back actually is basically when we thought that since the global economy is on the recovery mode, we ought to see some sizable increase in IT spending. At the same time, what we also thought, or what we predicted, is basically US dollar getting stronger over a period of time, whereby we thought that rupee will start depreciating. So we had this environment where business was stabilizing and is on the recovery mode. At the same time, there were tailwinds on the currencies as well. Now, in that environment, we thought that it is a no-brainer going into the tech space where the valuations were marginally at a discount to your average. Now, after this huge amount of outperformance vis-a-vis the index, now the valuations have slightly are above the averages, but we are still very, very comfortable giving those kind of valuations if the recovery sustains. Also, what we believe that those companies which will move up the value chain in terms of their offerings in the tech space is going to continuously get some sizable business with pretty attractive margins. So we want to be with IT as a sector for the upcoming 1.5 to 2 years.
Vaibhav, you did mention that you all are negative on the metal space. Any reason? What is the rationale for this?
Yes. So, for example, if you see, China actually, reducing their RRR rate in anticipation, or not in anticipation, but as a reaction to probably what's happening in terms of the trade wars as well. At the same time, what you are looking at is basically the base metal prices globally are starting to depreciate in the wake that Chinese yuan is weak. We have seen about 6 to 7% depreciation in yuan, and whenever we have seen this, in the past also, you have seen that the metal and the mining space takes a severe beating. At the same time, we also do analyze that we are probably towards the top end of the cycle of the whole rally, which has started say about 3 to 4 years back. So thus we are not too very keen. Having said that, what you need to understand is basically in the shorter term, which is a quarter basis, the numbers are going to be extremely strong on the whole metal space. But we are taking a longer term whole cycle call, and we are trimming down the weights on metals.
Interesting. Vaibhav, just one final question from my end. Where is it that you guys would be anti-consensus? Since you are long short and you have the advantage of going long or short either, are you short at some pockets where the markets might be bullish on, or vice versa? You're going long at a time when the market is not too bullish on that pocket?
No, so what we are thinking is basically at this point in time is, that on an overall market perspective, the PE re-rating story is out now. I don't think there is any PE re-rating which is going to happen. Now in that scenario, in a scenario where interest rates are going to go up, risk assets are going to go down, the component of the companies which are heavy on debt is something which we are clearly worried on. Two, those companies which are trading at higher multiples, but at the same time may disappoint in terms of the growth, both in the revenue and the earnings estimates. Those are the kind of companies we would ideally want to be pretty negative on. I think the space is evolving. We'll get more opportunities as the result season gets over.
Okay. Vaibhav, we'll leave it at that. Thanks so much for taking the time out, and all the best with your fund performance as well. It's a slightly trying time, so hopefully things are much better for you compared to peers or compared to the markets. Thanks so much for joining in today. Okay, that's the view from Avendus. Pockets that they're bullish on, pockets that are bearish on, highly leveraged companies and metals is something that they're shying away from. It's very interesting though. Metals have come off quite a bit. The question mark only is, can they bounce back? And if that were to happen, what would happen to specific names? However, the markets, the good news is that while the mid caps have corrected, the large caps have stayed high, and the Sensex has hit a high today, touching the 36,990 mark in intraday trade. So the question mark only is, what stocks have contributed this year? How does it stack up against the other emerging markets? And whether this narrow rally is an extremely narrow rally, or are we due to see participation from the others coming in as well? Let's start off with Yatin, who's here with all of those details. And Yatin, that it's been a narrow rally is no surprise, but surprises with the kind of components that have led the rally.
Yeah, clearly, Neeraj, and we have been talking about this for quite some time now. Probably the 5 Pandavas, if I would put it that way, have been bailing out the market. So we have, companies like TCS, HDFC Bank, which have contributed to nearly 1,000 points to the, Sensex as far as the YTD gain is concerned. Also, we had big boy Reliance Industries, which has contributed to nearly 150 points. And another 700 odd points have come in from Infosys and Kotak Mahindra Bank. So clearly, these are the 4-5 select stocks because of which most of the market move has come in. Of course, what is not working is the metal and the banking pack. So we have the likes of Tata Steel, which has led to a 100-point decline in the Sensex contribution. Also, if you talk about ICICI Bank and SBI, both of these are also dragging down the Sensex, and also the Tata Motors and the Airtels of the world have not been doing well. So, all of these stocks have been adversely contributing to the Sensex, but clearly the strength lies in the large companies like TCS, HDFC Bank, and that of Reliance Industries. But also, let's talk about, the Sensex performance versus the global markets, and we're talking about the dollar terms here. So, the dollar return for the Sensex is more or less flat on a YTD basis, which is year-to-date basis. But look at the peer set, Brazil, Shanghai and South Africa. We have seen cuts of anywhere between 10 to 20%, and all of them are down, significantly in double digits. And, this is one space. So India versus the emerging markets, India has clearly outperformed its peers ex-Russia. Talking about, other global, indices like Kospi, China, you look at DAX, CAC, there, we have slightly underperformed, versus the global mature markets or global large markets. So that has been the broad trends. India outperforming, the regional peers and the BRIC countries, but underperforming significantly when it comes to the global peers and, larger markets. So this has been the, scenario, but there has been, some bit of divergence on the mid-cap front. But, largely the concentration is there in the large cap when it comes to the returns YTD.
And Yatin, that's the benchmark, but it seems that it's not been a great year as far as the broader markets is concerned. So what's the data on that?
Clearly, Darshan, and you talk about the mid-cap end of the market. We have taken BSE 500 companies, to really cull out some data. So in a period wherein the Sensex return was nearly 7.5% in rupee terms, we had the BSE 500, which has fallen by 0.3%. So almost 0.3% down for the BSE 500 index. And surprisingly, only 86 stocks have outperformed the Sensex on a YTD basis. So nearly 410, 420 stocks in that BSE 500 have underperformed, the Sensex. So clearly, when it comes to the market performance on the broader side, it has been quite weak. In fact, the action is missing. Only 132 stocks out of the 500 stocks have been able to give positive returns. That is another thing that we would like to point out. And surprisingly, nearly 140 stocks, or nearly 25% of that universe, has given negative returns of over 25%. So there are 140 stocks which are down 25% or more in the BSE 500. And also there is another data point which says that only 132 stocks have been able to generate positive returns. So that is the broad story. And you look at the kind of declines that we have seen from Jet Airways to Vakrangi, PC Jewelers, HCC, Manpasand Beverages, all of them down over 50%. Of course, the smart trade has come in the IT pack. The mid-cap IT is something which has given significant returns. So we had the likes of First Solutions, Mindtree, NIIT, KPIT, Emphasis, all of those stocks doing well. So a select pockets doing well in the mid-cap universe, but broadly it has been a big pain in the broader markets, with only a few handful of stocks, or probably 100 top stocks performing in the marketplace today.
Okay, many thanks for that, Yatin, and certainly we'll watch out with what happens with the Sensex going ahead. A couple of stocks I want to point out. UPL continues to grind in lower, fresh 52-week low. There's some serious issue with UPL. It's down significantly. Even if we can pull up the 1-month chart or the 1-week chart, and you can see the cuts that have come in on UPL, there seems to be serious heavy selling that's happening on UPL. It's down 15% in a month. So Neeraj, I don't know what's gone wrong there, but there seems to be some issue with UPL. Apart from it, a Nifty stock falling 15% in a month, it seems a little strange.
I think it was down 5% yesterday.
In yesterday's trade.
So, it's one of the top losers among the Nifty constituents.
Yeah, so it's not had a terrible and a great week, a great month, and a week which has been arguably one of the best weeks in the recent past. So clearly some problems.
I think they did an acquisition also. Probably the street won't have liked that. That's about it. And Wipro is the second one I want to point out, moved at the highest point of the day. It's outperforming the other IT peers. And Wipro over the past few days has also been moving higher. So that's another contra trend that we've seen when high performers like UPL are falling, and a slow mover and an underperformer like Wipro has been moving up over the past few days.
Yeah, the 1 month may not show too much, but the last few days Wipro has had a terrific run. But that's been the case for this one big boy, and that is Reliance Industries. The market cap, guys, $100 billion mark. After more than 10 years, the energy to telecom giant is the second Indian company after TCS to enter the 12-figure market cap category. Samit Sarkar is here to tell us what's fueled the rally, especially in the last 2 years. Samit.
It was the launch of its biggest investment, that is Reliance Joshi, invested nearly 2.5 lakh crore in this telecom company, which now gives broadband and set-top boxes. Now, if you see the Reliance Industries market cap chart, you can clearly see how from 2010 to 1st September 2016, the company's market capitalization was range-bound. But after the announcement of Jio's launch, the company's market cap has literally doubled to 6.9 lakh crore from close to 3.9 lakh crore in 2016. And this is mainly on the back of Reliance Jio's success. Now, if you see, since the launch, Reliance Jio has been able to garner 21.5 crore subscribers in just 22 months. Now, if you see this data is still April, but as of now, the company has close to 21.5 crore. Now, this data is still April. Until April, the company had around 19.6 crore subscribers, which means on an average, the company has added nearly 1 crore subscribers every month. Now, the other factors that aided Reliance Industries' market capitalization, first would be First would be Jio has turned profitable. Now for the 9 months of financial year 2018, the company reported a net profit of close to 723 crore rupees, mainly on the back of a regulatory push and comparatively lower capital expenditures. Second is the launch of Jio Phone. Now this is a low price phone that has been launched by the company. Now Jio Phone has nearly 2.5 crore users, and the company aims to take Jio Phone users to nearly 10 crore users going forward. Now along with this, the launch of its home broadband and set-top box. Now this was recently announced in the AGM, and the company is aiming to take this subscriber base to 5 crore going forward. And if you see on the core investment, that is on the core business that the company had done, that is for its petcoke gasification plant and the refinery off-gas cracker plant. Now those plants are fully stabilized and are expected to give full benefits in this financial year, that is financial year 2019. And because of this full benefit coming in financial year 2019, the analysts tracked by Bloomberg are expecting Reliance Industries standalone EBITDA in financial year 2019 compared to FY18 to jump nearly 34%. This will be the highest jump in EBITDA that the company will see in at least the last 9 years, and that is what is aiding company's market capitalization. Now along with this, if you see the company's gross refining margin, now that has always been in premium to the Singapore gross refining margin, that is the Asian benchmark. The premium has been in the range of around $2 to $5 per barrel. For FY18, it was $4.4 per barrel premium to the Singapore gross refining margin. Now going forward, this premium is expected to further boost because of the petcoke gasification plant of the company, which will in turn lower the cost of production or cost of refining an oil, which will in turn boost the company's gross refining margin. And lastly, in financial year 2019, the company is also expected to generate free cash flow. Now, according to Bloomberg estimates, the company is expected to generate a free cash flow of close to 6,000 crore rupees, which will be for the very first time in the last 6 years. Now, from FY14 to FY18, the company's cash flow were negative because of the heavy capital expenditure. But now, as companies expected to report a free cash flow in financial year 2019, investors can also expect a higher dividend payouts going forward.
Okay, Samit, thanks a lot for bringing all those details with regard to Reliance Industries, a stock which has reclaimed the $100 billion mark in today's session. Remember, last time when it touched was October 2007, and that time Indian rupee was at 39.5 to the dollar. But clearly, the stock of the day, Reliance Industries, a heavyweight, contributing the most, over 40 points contribution coming solely from Reliance Industries to the 90 points gain that you're seeing on Nifty today. Well, let's quickly go across to our technical analyst and get some views going in on individual stocks and also on indices. We're joined by Hadrien Mendonca, Senior Technical Analyst at IFL, and also joining us on the show is Abhijit Phatak, Director at Definedge Solutions. Good afternoon to both of you gentlemen. Thanks a lot for joining us today once again on Bloomberg Queen. Abhijit, let me come to you. What are you doing on Nifty and Bank Nifty? It was a gap up opening in the morning. Did you take any trade there, or are there any fresh positions that one can look to take?
Once it gaps up, it's difficult to take any trade, but anyone who is long from the lower levels, for them, as long as Nifty is above 10,900, it is bullish and it can go towards the previous high, which is near 11,170, or maybe even cross it. So the level which I'm looking for any weakness to come in is 10,900. Below, till it is above that, it is bullish.
Vijit, today it's the Nifty Bank weekly expiry. Any strategy that you would recommend? It's almost an hour to go for trade. To close, any strategy on the Nifty Bank to play for today's expiry?
I don't think it is likely that Bank Nifty will expire below 27,000. So any dip can be used to buy maybe a 27,000 call, or maybe go long on the futures. So and maybe it can go towards 2700. If it crosses 27,100, it can go towards 150, even 200. But 27,000 is a level which should be used as a stop loss.
Well, in fact, 27,200 call strike for today's expiry has been quite active. So on the upside, probably that's the cap that one can look at with regard to Bank Nifty. Hadrien, coming to you, your call on Nifty and Bank Nifty, any fresh position that you would advise in traders to take?
Yeah, good afternoon. I mean, there is a lot of divergence that we are seeing. If you look at the Nifty, Bank Nifty, the way they are just moving out, out of their consolidation zone. But if you see, the mid caps and small caps are, going nowhere. There is a lot of, erosion of capital that is happening. Because looking at the index, there is a lot of long positions being taken in mid caps and small caps, and unfortunately, there is no rally coming over there. So I think this divergence that we're seeing is not good, but a breakout is a breakout. I mean, the index is painting a different picture. Mid cap, small caps are showing something else. The index says that it's going up because of, you know, the heavyweights like SDFC Bank, Kotak Bank, Reliance Industries. If you leave them out, I think we would be in negative zone. So I think as long as the breakout is, you know, intact, that is 10,900 and above, I think I would like to be, you know, long on an index perspective. As far as the Bank Nifty is concerned, as long as the Bank Nifty is above the 26,700 level, I think I'll be long on a Bank Nifty as well.
And Hadrien, what about individual stock strategies for today?
Yeah, so leaving the index apart, there is a lot of opportunity on the short side. If you look at the, you know, stock specific action, and I think there are a lot of divergence as well as reversal patterns that are visible on the daily as well as the 60-hour, the 60-minute, you know, chart. So I think both the counters that I am recommending are a short sell. First is Motherson Sumi July futures. We are seeing again a reversal, a divergence on the relative strength. So both these parameters are indicating that Motherson Sumi can further fall down. And I think we are playing for a target of 283, and every short position should be protected with a stop loss of 292. Second stock that I am bearish on with a short-term view is Asian Paints. Again, a huge divergence on the daily charts on the relative strength. We are seeing, you know, a doji kind of a formation that we saw yesterday, followed up with a bearish engulfing pattern today. I think Asian Paints is set to move a little lower from here on. We can short sell Asian Paints July futures for a target of 1326 and keep a stop loss at 1366.5.
What are your stock ideas? Abhijit, what about your stock ideas for the day?
Yeah, I have one long and one short. Arvind Mills has broken out above 410, 412 futures. So as long as it remains above 410, it can be bought on any dip with a stop loss below 405. It can go towards 430. And one short is, in fact, there are two shorts which are looking, the stocks are looking quite weak, Titan and McDowell. Titan, not at this level, but on any rise with a stop loss of 825, this can be shorted. Right now it is 808. So maybe towards 815 tomorrow it can be shorted, but the target on the lower side is well below 800.
Okay. Daljeet Singh Kohli, fund manager at Valentis Advisors, now joins us on the show. Daljeet, good having you. Thanks so much for joining in. Really appreciate your time. This is Neeraj here. How are you approaching investing currently, Daljeet? The broader markets don't have any strength whatsoever. You could argue that select stocks have it, but otherwise, by and large, the broader markets are weak, but we are sitting at new highs on the Sensex. Where do you park in fresh money?
Good afternoon, Neeraj. Yes, this is a tough time, I would say, for all fund managers. And as you rightly pointed out, the big dichotomy on the index, we are making a new high. But on the mid-cap and broader market, portfolios are getting eroded every day. In fact, from January to now, probably between 10 to 20% everybody would have lost. So I think this is the time where basically that misnomer, that mid-caps, when you talk, we paint them all in one brush, no? So we say all of the mid-cap index is going this way, and the entire set is moving in this direction. But mid-cap is actually, to my mind, a stock-specific story. So whenever you are buying or investing in any company, you are doing it only for that particular company. There might be a big dispersion between the same sector, within the same sector, the company that you are investing in, there are other companies. So, and mostly in our portfolios, we will not find, although our benchmark is also mid-cap 50, but then our stocks are never part of that. So it's all about finding the right stock and working deep into understanding those company models. Yes, but there will be, despite all that hard work, whatever you do, if the market sentiment is down, if things are not in favor, then probably you will have to bear the pain. So right now, probably the best way is that you keep doing your hard work, keep finding out the ideas, and be prepared that even if you bought at some X price, after your buying, the price may go down. but doesn't matter. If you are convinced about the story, about the management, about the numbers likely to play in next 2 years, I think then there is nothing wrong in that. So you basically, it is in fact in a way a blessing for people like us, because it gives us more time to work on the stock idea. 2 months, 3 months back or 6 months back, the problem was that you think of an idea and next day it is 10% up. You want to buy, you want to keep on adding that stock, but every time you are buying at a higher price. Now you have that liberty of working more detailed and doing all scuttlebutt and all, going back to vendors and talking to the management. You can do take your liberty and do that time. So it's, in a way it is good, but whatever, you have to bear the pain of seeing that portfolio getting eroded 1%, 2% a month, or may not moving in that way, the way it was moving 6 months back. But that's the part of the game.
Good afternoon, Daljeet. Hi, this is Darshan here. What, as a fund, what are you all doing at this point of time? Which are the stocks and sectors that you are currently parking your money in?
Yeah, Darshan, in the last month or I think 2 months, we have actually shifted more towards a little bit defensive kind of a stock. So one can say pharma is one area, which incidentally I like also. So, and that was giving good opportunities. So we entered into some of the pharma stocks. We have also added some mid-cap IT stocks. In fact 3-4 of them. So that way you can say we are moving more towards defensive, because last 4-5 months have given that, as we were talking of erosion of wealth and erosion of your existing portfolio. So you need to arrest that at some point. No? So the better way to do is that you park in those kind of stocks where probably the downfall is much lesser, or and at least you can make up some loss in other areas by the stocks which or the sectors where there is some upside of potential. So pharma, IT probably was doing good there. Some of the NBFCs which are regular NBFCs, so big names which continue, that they are always there in the portfolio.
Daljeet, since you spoke about pharma, we are yet to see earnings recovery coming by in this sector. Also wanted to know, what did you make of the development where Pfizer has rolled back prices after US President Donald Trump tweeted about it? Do you think that could percolate down to the other pharma companies as well? Because pricing pressure was the main reason why all these pharma companies so far have been underperforming in the last 2 to 2.5 years.
See, these things have a temporary impact. Obviously, nobody would want to, if you have to work in that country, you won't fight with your president. So, I think sensible thing Pfizer did, and others will also probably do. So, near term, yes, we might see that this kind of pressure tactic playing. But ultimately, how long you can do this and how long it can work. See, finally, the patient requires the particular medicine, right? And if the company is there, if their product is well accepted by the doctors, you really can't do too much on that. So it's just a matter, it's more of, I think, putting pressure tactics, and probably it can also do, the other part is that companies which were rampant in increasing price increases, they might slightly get a little backseat, but I think this is a temporary problem. I don't think this will be a very major issue and it will stop, or companies from here onwards will stop increasing the prices. As regards Indian companies, they are actually competing more in the generic side. I think there the pricing pressure will continue. Now pricing pressure is a given thing, so we are not expecting that that problem will go away. That will always be there. From here onwards, Indian companies will score where what last 1 to 3 years what they were working on specialty side, that will start seeing some light of the day. Second, this consolidation will happen, so then there will be a lot of products where earlier if there were 10 people, now that will become a 2-player, 3-player market. So if one of our Indian companies there, they will be able to get that. So some places, in some products, they will lose. In some products, they will actually consolidate. So net, the bigger companies, they are actually doing this for last 1.5 years, and I think they will be able to manage this situation. Regarding the numbers or how it will reflect, I think we are also looking at that FY20 will be the time actually to look at financials of these pharma companies. From here till FY20, there will be slight improvements. There will be lack of those one-offs or write-backs which they were earlier taking. Issues regarding FDAs are slightly at the back burner. So probably from here onwards, sentiment will start turning positive. Financials will actually, in significant move will come only in FY20. And if you start buying from now, as I said, preempting these things, it will give you a good return over a period of time.
On Reliance Industries, back at the $100 billion mark, is the story here to stay?
Oh yes, definitely. Though I'm not supposed to speak on stock specific, but in my earlier days as an analyst, we have been recommending this stock for a very long time. And I think 1.5 years ago, when nobody was even talking about it, and the feeling was that probably all this money which has gone into telecom is sunk. And our call was that even though if it is sunk, the money that is being put in the core business, petrochemical and oil refining, that money is likely to start showing numbers from 19 onwards, and that is what exactly is now going to play. Plus the added advantages that telecom is not sunk. Actually, it is giving them much faster returns than what many people had thought. So I think this story for next 2-3 years is going to definitely play out. They have this expansion plan of petrochemical complex. One, it is ahead of time. Second, it is right opportune time when there is a lot of demand. So this financials will improve significantly. So for last 6-7 years, what was stagnant ROE, probably from here onwards, we'll see a good jump in the next 2 years in that ROE.
Okay. Viewers, remember, this is not a recommendation from Daljeet Singh Kohli, more a view on what Reliance Industries business looks like. Daljeet, really appreciate your time today and understand that you obviously can't give stock specific comments, so that's taken on board as well. Thanks much and look forward to have you more often on this forum.
Thank you.
That's the view from Daljeet Singh Kohli, fund manager at Avendus Advisors. Just before we hear out one more market voice, a quick view on trades in Reliance. I don't think we've taken it from Hadrien or Abhijit. Hadrien, I don't know if you've given your view already, but if you haven't, for somebody who has long positions in Reliance, would you recommend staying long?
Yeah, definitely you will stay long. We are seeing a very a large consolidation breakout on the weekly charts, and I think a breakout shouldn't be doubted. And Reliance Industries is seeing that very excellent up move during this week. I think a long position should definitely be held on to, and I think we are all set to move towards the 1150 mark as well.
Okay, that's the technical view on Reliance Industries. Just want to mark few stocks actually which have come off the day's high, and a lot of the stocks are actually now trading in the red territory. Pull up Stride Shasun, that's come off from the day's high. That's now sitting with cuts of nearly 3.5%. You've also got something like Manappuram Finance, that's seen a cut of almost 2 to 2.5%. Remember, we were mentioning United Spirits. In fact, this was one of the strategy from our technical expert yesterday during the show countdown, and there was a sell call. And today also, even in a strong market, United Spirits has not seen any gains, and that's sitting with cuts of nearly 2 to 2.5%. So watch out for all these stocks. But moving on, let's also talk about the chart of the day. The FIFA finale is this weekend, but what happens to the runners-up, not just in the game, but also to the equity markets of the respective nations? Jayesh Kalani has done some analysis on this for our chart of the day segment. Jayesh, over to you.
So Navneet, this is highly coincidental, but just bringing out the facts that the runners-up of the Football World Cup final, their equity markets actually declined 1 month, after the final has been played. So even the equity markets a bit of sulky in nature. But if you have a look at the trend, 2014, Argentina lost the final, and their benchmark index declined more than 5% in the next 1 month. So did Netherlands, France, Germany. Have a look at that one in 2014. 2002 when they lost the final. Over the next 1 month, the DAX index in fact saw a cut of about 17.4%. So did Brazil and Italy in 1994. Now this time around it's between France and Croatia. Croatia, of course, this is the first time that they're going to participate in the World Cup final, and for France they will actually look to win for the second time after their win. But if you'll have a look at France's performance in one of the finals where they have lost, it was just down about 0.1%. So that's as far as the runners-up are concerned when it comes to the FIFA World Cup and the coincidence or the correlation with their equity markets.
Interesting. If France loses, at least the investors would be hoping that it's a repeat of 2006 and not otherwise. Yes, interesting data. Thanks for putting that into perspective.
Who are you supporting, Neeraj? Croatia or France?
The mind says France, but the heart says the first-timers, so maybe they should actually get it.
Okay, let's see. It's going to be an interesting weekend, definitely, when we get to see the finale of the FIFA World Cup 2018. But before we slip into a short break, CLSA has turned bullish on consumer-facing stocks. In a conversation with Bloomberg Quint, Mahesh Nandurkar, India strategist at CLSA, adds that defensive stocks, especially the pharma, will benefit from forex tailwinds. Listen in to a slice of that conversation.
Clearly, there will be some positive news, there will be some negative news, the market will be volatile, that's there. But we should not lose the sight of what are the bigger trends happening in the global markets. And the bigger trends is that, one, the US Fed has already started raising rates. They have hiked the rates a few times in the last 12 months. Over the next 6 to 12 months, there will probably be another 2 to 4 rate hikes, adding up to 50 to 100 basis points. Also, if you look at what is happening in Europe, the ECB has already talked about their tapering program of the QE. So the interest rate scenario globally has been towards a trend of going up. Also, the global liquidity conditions are also slowly tightening. So that is really the big macro trend globally that we need to keep in mind, which will keep the equity valuations under pressure globally and certainly in the emerging markets, including India.
Right, Mahesh, recently we had the MSPs announced by the government. What are the other policies that are likely to influence markets and economy in general, especially keeping in mind that we are less than a year away from the general elections?
And actually, if I can just add a follow-up out there, Mahesh, on the MSP itself, you guys have been writing about this now for the last 6 to 9 odd months, if I'm not wrong. How big an impact for the rural sensitive stocks would this be, if at all?
Yes, so as you rightly mentioned, keeping the elections in mind, there has to be some focus on the rural economy revival, and which is the right step that the government has been taking. We know that the rural wage growth has slumped to an all-time low of close to around 3 to 4%, and that definitely needs to go up from the political perspective. So MSP hike has been one. We've obviously seen a few announcements at the state government level on the farm loan waiver. And going forward, I think there will be many other programs that will be taken up, such as, so even when we talk about the roads program, mind you that nearly 50% of the capex for a road project goes into land acquisition, and that essentially is money going into the hands of the farmers or the landlords, basically most of which goes back into the rural economy. So my sense is that it will be a combination of several of these MSPs, farm loan waivers, road program, and the other initiatives, such as obviously the government has been talking about the medical insurance program. Let's see how that rolls out. There are certain states which have talked about certain innovative schemes like certain 4,000, 5,000 rupees per acre per crop as the subsidy and so on. So expect this kind of policy framework to remain both from the central and from the state government side over the next 12 months or so. And naturally, this should have a positive impact on the rural facing industries and the companies. So the staples companies, the two-wheelers to some extent, also on the four four-wheeler side, including the tractor companies and so on, should clearly be the beneficiaries. There will be some consumer durables as well, like the electricals or the fan fitting companies, etc. So some of those low-ticket items of consumption should definitely see some fundamental improvement in the growth outlook.
FMCG, Mahesh, see a leg up? I mean, the stocks are trading at valuations which are abnormally high, higher than their averages, higher than probably valuations that they have traded in the best of times in the last 8 or 9 odd years. But this should give a leg up to earnings for sure. What do you do out there? It's a bit of a tricky call.
Oh, absolutely. So you hit the nail right on the head, especially on the staple side. The multiples are at an all-time high. So there, one can take a relative value approach. So we definitely see relative value in tobacco stocks, for example, which are trading at almost 40 to 50% discount to the leading FMCG companies. So that is, certainly a space to watch out for. And similarly, we can see some value based buying that can happen on the tractor side, and there are a few other stocks on the two-wheeler side as well, where we can see the relative value.
All right, so in that case, Mahesh, I want to move on and address the technology sector as well. Well, in this case, we've started to see the largest company in the IT sector, the Indian IT company come through with good earnings. Does this set the tone? And I'm not talking about TCS specifically in this case. I want you to give us a better picture of what we can take from the earnings when it comes to the entire sector as a whole. Has it turned a corner, and can we expect better things to come from the entire sector?
Yeah, so the thing is, rupee weakness is definitely a tailwind for sectors like IT and pharma, and also the result season has off to a very good start, and the commentary from the from the top two companies, in fact two of the largest companies that have already reported, clearly shows that there seems to be some signs of revival in the US BFSI space, which is actually one of the largest business verticals for most of the IT companies in India. So once again, one can look for relative value within the IT space as well. There are certain large cap stocks as well which are trading at a significant discount, and some kind of a value buying should be done there as well. On an overall basis, we continue to maintain a neutral stance on the IT side, but the exporting sector that we are very, very bullish on is pharma and healthcare. We are actually recommending a double overweight on pharma at this point in time, and the reason, apart from obviously the rupee related tailwind, is that the worst in terms of the news flow seems to be behind. We are slowly beginning to see the pricing pressure which has hurt the performance of the pharma stocks stabilizing, and that's also in the base. So from the year-on-year comparison perspective, FY19 should be a good year for the pharma sector in terms of earnings growth. We are expecting more than 20% earnings growth, and it's also a sector which is not that well owned in the institutional space. And keeping in mind that the news flow seems to have turned the corner, we remain optimistic, much more optimistic on pharma than IT at this point in time.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार, just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge, साथ हमारा, सफलता आपकी. the SME Growth platform from India's largest stock exchange.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you.
Do you have analysis paralysis? A case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Welcome back. You're watching Countdown on Bloomberg Quint. Lots of stocks moving into fresh lifetime high. A look at Larsen & Toubro Infotech, L&T Infotech. That's up 3% at lifetime high. The entire L&T Infotech, the counters in the mid-cap IT space. So L&T Infotech is at a new high. KPIT Tech has moved to the highest point of the day. So have counters like Mindtree. That has also moved to the highest point of the day. Wipro is trading at the highest point of the day. Wipro is up 3%. So IT as a space has started gaining a lot of traction. The other counters which are trading at lifetime high, there is Astral Poly. Astral Poly again coming in close to the 1100 mark in trade. The other sector I want to talk about is sugar. Most of the sugar stocks are doing well. So pull up a Balrampur Chini or some of the other Bajaj Hindustan. So Balrampur Chini is up almost 8% in trade. Let's pull up the other sugar. Dhampur is up almost 4%. So there seems to be a lot of traction in the sugar space, Neeraj.
Well, just a quick thought from our technical experts once before we get our fundamental expert, next fundamental expert on board. As I look at stocks which are hitting fresh highs, I think the mid-cap IT space is peppered with gains. L&T Info, KPIT, a clutch of other names seem to be doing rather well for themselves. Abhijit, is it too late to take any trading positions into some of these names? I mean, these two that I mentioned, or a couple of others too. Hexaware is, I think, up and about in trade. Persistent 2 days ago hit 52-week highs as well.
No, I think they are still bullish, and as long as they don't break any supports, one can still buy onto them. And I mean, actually, Hexaware is one stock which is quite bullish for me, and it can go towards 550 in the maybe in the short term. But only problem is stop loss is well below 480, so the risk right now is a bit higher to enter at these levels.
Hadrien, what about Wipro? It's moved up significantly, moved to the highest point of the day, up almost 3%. Do you believe that if someone has to take a position, they should take it in Wipro?
Yeah, I was going to come to the stock Wipro, even if you would have not asked me, because, the breakout that I'm seeing on the stock has come after a long time. And I think, this is the right stock among the, mid-cap ITs to capitalize on, because this has been a very huge underperformer. I think it's the right time to go, go ahead and buy Wipro at these levels. In fact, it would be more convincing if we close above the 200-day moving average, that is close to 278, 279 zone. Once we see that happening, I think going aggressively long on Wipro should be a very good strategy, because we could see very good returns in the coming week or so. So Wipro should be a top pick at the current moment.
Interesting. Okay, so IT is right up there. Hadrien saying Wipro should be the top pick at the moment. That speaks volumes about the kind of strength that exists in these names. Let's ask Mayuresh Joshi, he's fund manager at Angel Broking, joins us on the show now. Remember, we spoke to Mayuresh at length about TCS earlier, but Mayuresh seems that while TCS and Infi may be a bit quiet, the fever has spread across to some of the others. We'll get to know about HCL Tech's buyback today, a bit later on, but Wipro or some of the mid-cap IT names, is there value in buying them right now? The value may be in growth that they show as well.
I think that is a possibility, Neeraj, and a large element in terms of the price action that you've seen across the IT sphere, whether it's large cap names or the mid cap names. I think it's more to do with the revival you're probably seeing in a lot of their sub-segments. So again, the TCS commentary, as you're pointing out, I think were clearly indicating and vindicating the point that BFS can show a very strong bounce back what you've probably seen in segments like retail, life sciences, I think those segments probably are doing well as well. For other companies, I think segments like engineering, you're probably looking at IMS actually contributing significantly higher proportions going forward. Within the mid-cap universe, again, I think the growth that is expected to come through, both in constant currency and dollar terms, is expected to be significantly higher than what you'll probably see within the large cap names. And again, the client diversification and the base that they've got with smaller ticket sizes between $1 million and $5 million odd dollars, and their ability to probably have a niche suite of product stroke services and the execution parameters as well, in the sense of digital actually starting to contribute almost 1/4 of the overall revenue pie. I think that does augur well both from a margin perspective, from a sectoral perspective in terms of deal wins that are expected to come through. With execution expected to improve, you're probably looking at utilization levels improving and attrition levels coming down, improving their return ratios. The payback policy that a lot of the large cap names have got is very, very supportive. So I think buyback is the most efficient method of rewarding back shareholders. So to that sense, I think what HCL Tech comes out with its pricing will be very, very interesting. But for the sector as a whole, my own sense is that the earnings growth in constant currency and dollar terms should be quite stable. And again, I think the core key parameters should probably have a very stable showing as well. So I think we've liked the top tier names in the past, or in the mid-cap universe, obviously we like stocks like Mindtree, Cyient and IT Tech. But the move, Neeraj, has been humongous on these stocks. So from a near-term perspective, I think they're richly valued. But if the story in terms of the dollar growth probably persists as we probably envisage, I think there can be still potential upside. So I think stocks like Mindtree, in my opinion, can still do well over a medium to long term. Large cap names like HCL Tech are very reasonably valued, even at the current juncture, irrespective of what they announce in the buyback. And again, I think stocks like Nucleus is somewhere where our focus is on a bottom-up approach.
Okay, just pull out Karnataka Bank. The numbers are out, extremely strong set of numbers. The profit has increased significantly, profit at 163 crores versus 135 crores. They managed to get the asset quality slightly better than what it was last time around. In it, NPA at 2.92 versus 2.96. Similar is the case with the gross NPA. So clearly, traction seems to be with some of the private sector banks. Karnataka Bank, I think it's a decent set of number that's come out currently. But I think more important news, let's switch to the telecom news. The telecom department granted conditional approval for the Vodafone Idea merger, and while some sorts of condition are procedural, some have a significant impact on the two companies' financial. So Amit Sarkar is here to take us through the riders and the impact.
So Idea Cellular yesterday announced that they have received a conditional approval from the Department of Telecommunication. Now the conditions that have been put forth by Department of Telecommunication include bank guarantees, cash payment, and also some regulatory approvals that they need to bring in if they want the merger to go through. So here are the details about the same. Now Idea Cellular has to replace bank guarantees worth 6,400 crores which were earlier submitted by Vodafone Mobile Services. Now they have to do so because Vodafone Mobile Services is getting merged with Idea Cellular. Along with this, Idea will also have to give additional bank guarantees worth 3,300 crore rupees related to one-time spectrum charges of Idea and Vodafone, both the companies. Now, separately, Idea also has to pay close to 3,900 crore rupees in cash as liberalization fees. Now, in an event of a merger or acquisition, the acquirer, in this case that is Idea Cellular, has to liberalize the administered spectrum owned by the acquired company, or has to submit these spectrums to the government. So Idea also has to pay this liberalization fees of close to 3,900 crore rupees. So in short, they need to give bank guarantees worth 9,700 crore rupees and needs to pay cash worth 3,926 crore rupees to the Department of Telecommunication. Now, as part of this merger and acquisition guidelines, the combined entities' circle-wise revenue market share and subscriber base cannot exceed the 50% mark. So in this case, that is the Idea Vodafone merger case, the combined entities' revenue market share exceeds 50% mark in 3 areas, that is Kerala, Maharashtra and Gujarat, and the subscriber base exceeds the 50% mark in 5 circles, that is Gujarat, Haryana, Kerala, Madhya Pradesh and Uttar Pradesh West. So the combined entity will now have to bring down this below 50% within a 1-year time period, which provides the other incumbents a good opportunity to increase their revenue market share and also subscriber base. Also, DOT has asked Vodafone to pay a liberalization fees related to an earlier Vodafone Group merger that the company had done. Now, Vodafone has appealed against this in the TDSAT. So regarding this, DOT has asked Idea to rightly use Vodafone spectrum, and also said that if TDSAT favors this in case of Department of Telecommunication, then Idea will be liable to pay this liberalization cost to the Department of Telecommunication.
Interesting. Something that, Somit, something that maybe Idea could have lived without, right? This may not be terrible news, but it's certainly not news that is very welcome.
But it would be difficult for the company because it is already highly leveraged, and submitting bank guarantees worth nearly 10,000 crore rupees and giving cash worth 3,900 crore rupees. That could be difficult for Idea. And if you see on a revenue market share front and on subscriber basis, now incumbents are struggling to get more subscribers and to maintain their revenue market share. So giving up revenue market share in important circles would be difficult for the combined entity, and would be a good opportunity for the other incumbents to grab more revenue market share and subscribers.
Okay, Somit, while this is information that we've culled out, I'm sure the official releases and as and when more details come out, do keep us filled in with this as well. Thanks so much for joining in right now and telling us about this. Now, Mayuresh, a beaten down stock, financials not the best, balance sheet not in the best of health, and now this as well. For those limited few who still have an Idea in their portfolios in the hope that at some point of time the merger will bring about some upticks, etc., etc., this doesn't spell good news.
Yes, and I'm reminded of that song, Neeraj, of Bon Jovi, Keep the Faith. So I think any investor who's probably still stuck in that stock at higher levels, I think he has no option probably to keep the faith. As Somit was rightly pointing out, I think the kind of external liabilities that Idea needs to probably service at this point of time, coupled with the fact that the 4G footprint itself is very, very weak. So even if you're talking about the entire merger coming through and the subscriber base actually becoming very, very large, I think they are obviously going to lose subscriber market share in a few circles, and they're obviously going to lose the revenue market share as per TRAI regulations in a few circles as well. Now, in a scenario where your ARPUs are actually getting downtraded every quarter, and the existing incumbents along with the new player Jio has every chance to probably eat into your market share with the space that you're lying vacant with the new plans that they've got. I think the entire onus and the onerous liability in terms of how the cash flow improvement will happen, I think it's going to be a very, very difficult task going forward. On the other hand, you're probably talking about capex requirements actually getting burgeoned over the next few quarters and years as well, and that puts additional stress in terms of their free cash flows. So setting aside or offsetting the entire synergy benefits that are expected to accrue because of this merger over the next few quarters, I think somewhere the cash flows are still going to be a little bit sticky for the company, and therefore the ratios, specifically on the net debt to EBITDA, might still be on the higher side. They're actually planning to do, or they've actually taken board approvals for equity raising. So through that bit, again, I think a part of whatever liabilities actually come out can get serviced through the equity raising component. But I think the ROEs will still remain suppressed. So is there value in the stock for Idea at this point of time? Considering the outlook in terms of the sector over a longer period of time, the value might exist. But in my opinion, I think the underperformance might still continue because of weak numbers and cash flows being exhibited.
Okay, stay on. Lots more to chat about, gentlemen. Lots of viewer queries. We'll take some of those as well. Mayuresh has some recommendations, some closing trades from both Abhijit as well as Hadrien. But first, 3:15, time to take a look at what dealing rooms are recommending in the session today. Yatin is here with his channel checks. Yatin, good afternoon. What are you gathering?
Afternoon, Neeraj. The markets has been, near the lifetime highs, but there are certain stocks which are facing some bit of, pressure. ZTV is one stock. Wherein at lower levels, dealers are indicating a positional buy. Of course, they are expecting that the first quarter earnings and the kind of momentum media stocks will see moving forward is something that they'll be watching out for. So at lower levels, dealers are recommending a positional buy as far as ZTV is concerned, stock under pressure. On the flip side, Arvind Limited has seen a spike in the second half of the trading session today. The company is on road shows, but dealers do indicate that FIs are buyers in trade today as far as this textile company is concerned. Almost 3.5% up for that one. 20 lakh shares traded already on Arvind Limited. And finally, Infosys, That is one stock in the technology pack which is looking at some bit of pressure, 2% down for this one, despite the fact that the entire mid-cap IT pack, large-cap IT stocks like TCS are doing well. So the Infosys is relatively underperforming, and dealers are indicating that there is a short selling seen in the counter ahead of their quarterly earnings. So Infosys is one stock wherein dealers expect the weakness to continue.
Okay, thanks, Yatin. And remember, Infosys will come out with its numbers tomorrow. So Infosys is trading week ahead of the numbers. Mayuresh, you've given quite a few of your stocks that you believe could be accumulated. Will be more like a rapid fire given the time paucity. But GIC Housing Finance, a target of 655. What do you like about GIC Housing?
No, so I think the loan growth, Darshan, should be exceptionally strong going ahead. And again, the dependence on their bank borrowings has come down substantially, and that should be a huge support, specifically in a scenario where you're seeing the cost of borrowings actually harden. So to that bit, again, I think the kind of pass-through that will happen in terms of repricing of their advances, along with the base effect that you'll probably see, will have a substantial effect in terms of their earnings. And the book value at this point of time is extremely, extremely competitive. So I think asset quality pressures that have got exhibited with GNPAs at 2.4% should start coming down. And as they start coming down, I think the return ratio should improve.
What about Bata? You like Bata also. What's the rationale there?
No, so I think extremely strong balance sheet, and what you've probably seen in terms of their product mix, I think the skew will probably help them achieve the right kind of realization growth. On the other hand, you're probably talking about margins being extremely stable at this point of time. With the unorganized players actually having a large say, I think players like Bata within the organized space should see a gradual improvement, both in terms of volumes as well as the realizations that I'm talking about. Again, I think the return ratios, specifically ROCEs, are extremely strong and can expand very, very meaningfully as more store expansion probably starts happening and leverage plays out on the balance sheet. So strong balance sheet, strong earnings growth exhibited. I think the margins also should show gradual improvement going forward, which will lend support to their earnings.
Okay, Mayuresh, we'll take one more. Mayuresh, Shriram Transport, 1764 is the target that you've given. That's quite an aggressive target that you've given post the fall that is there. Do you expect, what's the rationale here?
No, so I think all that is being said and done, I think the management has probably given clarity. Though I think the street will like to have some more time to believe what actually goes through. But if you look at the core numbers itself, and even if you account for the expected liability that can come through, which in my opinion should not, again, I think the entire premise in terms of the hit that the book can take is very, very marginal, specifically on the FY20 estimates. Secondly, I think the core numbers, both in terms of the advances growth and the asset quality pressures that the company had witnessed a few quarters back, those pressures are clearly receding. And as they've moved to the 90-day bucket, I think those pressures will slowly and steadily start dwindling down. A large element in terms of how the valuation for Shriram is at this point of time, extremely competitive in my opinion. So though the stock might just react from a short-term perspective in terms of the news flow that can come through, my entire premise in terms of what the management has actually come out, and with those assumptions, I think the core growth should be quite reasonable for the company going forward, without taking a substantial hit in terms of the estimated liability that can be coming through over the next few quarters.
Okay, Mayuresh, we'll leave it at that. Thank you so much for taking the time out and being with us today. Really appreciate your time. Well, that's the view from Mayuresh Joshi. Okay, some viewer queries, some closing strategies from both Hadrien as well as Abhijit Phatak. Hadrien, I'll come to you first. Your top closing strategy first. Is it a Wipro or is it something else?
Yeah, Wipro, we've already discussed, and I'm very confident on Wipro. But you know, another counter in the same space is Mindtree. You know, it continues to show immense strength after the breakout that we saw 2 days back. So I think we should continue to ride the momentum under Mindtree and play for a target of close to 1100. That is its previous all-time peak.
Abhijit, what about you? Your top closing strategy?
Yeah, it is buy on dip for the Nifty and some bullish stocks, which are Arvind Mills, which I have said. Maruti is a bullish stock. Sun Pharma, in fact, I'm expecting some action in pharma stocks maybe from tomorrow. Sun Pharma, Cipla, these 2-3 stocks might become bullish because they have consolidated quite a bit over the last few days.
Okay, there are some viewer queries, gentlemen, if you would be kind enough to answer some of these. There's Lakshmi Kumar, who is talking about views on BEL and IDFC Bank. Hadrien, do you track either of these two?
Yeah, so BEL, there seems to be no respite. We saw a 3-day rally in the past few days, but that is turning out to be just a deceiving up move. I think we are still not out of the woods as far as BEL is concerned, and if we see a breach below its previous low, that is coming close to the 101 mark, I think that lower top, lower bottom structure would continue to hold true. Which means that avoid going long at this moment. If you are holding, use rallies to exit.
Interesting. There is of course a constant query on Reliance coming all through the show. Would want to take a repeat query as well. I've asked this to Abhijit earlier, so Hadrien, maybe I'll ask you about Reliance Industries. If you were long, would you stay long?
Doubt I would continue to stay long, especially after that weekly chart breakout that we have seen. Any decline, in fact, would be a good opportunity to again re-enter in Reliance. So stay long.
Interesting. Okay, some of the stocks just before we start wrapping up the markets. Abhijit, there could have been people who would have taken a long on an oil marketing company early today. The stocks are still in the green, but off the day's highs. Would you carry home the long positions?
Yeah, they opened gap up, and one good thing as far as on the bullish side is they have not gone below the gap, so they have just maybe barely filled the gap. So as long as they are above the gap, they can be held on, and if with the stop loss below the gap, which is yesterday's high in the second session.
Abhijit, any view on UPL trading at a new low? There seems to be something definitely wrong, heavy selling happening on the counter. What do you make of it?
Yeah, I don't know. I don't track any news, so I don't know what is the problem. But then it is definitely weak, and any bottom fishing should be avoided unless it shows some, some kind of reversal pattern on at least a couple of days, higher tops and higher bottoms.
Hadrien, you spoke about Wipro. What about the mid-cap IT space counters like Mindtree, counters like KPIT, Hexaware? Which among these or any other mid-cap IT stock that you would recommend?
Yeah, so Mindtree was, the stock pick for tomorrow. And as far as the other stocks are concerned, KPIT is another stock that's really showing good momentum on the upside. So I think even KPIT can be added in the list of the stocks that one can hold, or even if one wants to buy, use any declines to buy.
Okay, interesting. There is a call query on Havells as well. The gentleman has bought an Havells call. Just wondering, Abhijit, would you trade Havells at all via the options route? And if somebody's long a call option, any strike as the case may be, or maybe the most active strike, what would you do?
No, unfortunately, I never track Havells from the option side. And since it is not very liquid in options, I don't track the stock much at all. So I wouldn't be able to answer this question.
Okay. The other bit is the weakness that we're seeing in base metals by and large. On more days, more often than not, we see likes of Vedanta, etc. correcting. Just bring up Vedanta, the charts for the last, not just today, but for the last 1 month odd, and you will see there will be days where there will be substantial pronounced weakness. There will be bounces as well, but on more often than not, Vedanta would continue sliding lower. 14% in the month gone by, and in the last 1 week as well, Vedanta has corrected at a time when the markets have shown some strength. The commodity names have come off. The last 7 days, it's corrected about 8.5%. So there is perceptible weakness out here in base metals. Hadrien, Mendonca, okay, for somebody who wants to take a fresh position in metals, looking at the weakness, is this a good time, or is a large portion of the juice already absorbed in the trade?
So I think, the Nifty Metal Index, if I remember quite well, 2 weeks back when we were here, I spoke about the metal index at an inflection point. It was a make or break point for the index. So, we saw a little bit of support that the metal index took towards its declining trend line support zone. Unfortunately, if you see today, that support zone is on the verge of a breakdown, and that's the reason why we are also seeing all the other constituents like Vedanta, Hindalco, being under pressure. So I think Vedanta specifically, the rally that we saw, 2 days rally, we tried capitalizing. Unfortunately, it didn't turn out to be that great. But for anyone who wants to take a short position after the breakdown that we've seen in yesterday's trade, I think you should use a small bit of rallies to start shorting Vedanta, because it has actually entered into a lower top, lower bottom structure, which is not a good sign. So for Vedanta, one should use rallies to start short shelling, and one can make a bit out of it.
Okay, so that's the view that's coming in. Neeraj, just 3 minutes to go for the market to close. What are you spotting there?
Well, let's try and wrap up the markets. I'll talk about maybe the large caps and the indices. Darshan will tell you about all that's happening in the markets at the broader end of the spectrum, where there is some weakness. And mind you, even on on the benchmark indices, there has been a bit of a pullback from the high levels of the day. The Sensex may be steady at about 73.75%, but the Nifty and the Nifty Bank were as high as 1% and have come off. The broader markets have red on the screen. I think the next plate will show you a tinge of red. So the mid caps, the small caps, all of them trading about 0.5% lower. Let's just get the mid caps and the small caps up on the screen, and you will see that there is some bit of weakness that will come in. Okay, we'll just try and maybe Darshan will try and bring you up to speed with all that's happening on those indices as well. Let me just stick to the large caps. Reliance, a big support, though even that too has come off from the highs of the day. Some bit of intraday profit booking, I would reckon, or maybe actually multi-day profit booking, because it's had a good run the last few days. Up 4%, BPCL up about 3%, the crude cool off having that bit of an impact. Bajaj Finance, amongst the few financial names which has done well. HDFC about 1.5% as well, but IOC, BPHP, HUL about 1.5%. Bajaj Finserv and Bajaj Finance among stocks which have done well. The losers, UPL continues to grind lower, now down 4% in the session today after the 5% gash yesterday. So this one is in a problem of its own. Vedanta amongst the commodity names which have gone down, and IT has had a slightly lackluster day today, especially Wipro and TCS2, which has been very, very flat. Adani Ports and Z Entertainment amongst the tiny tunes in terms of weightage, which have also corrected in trade. But Darshan, broader markets, no such luck. Fair bit of pain.
Yeah, there is, and if you're looking at the Nifty, very, very managed at this point of time because of a few counters. We'll pull up the contribution chart and you'll come to see. But look at the counters which are trading. The mid cap is down close to 0.5%, when the Nifty itself is up almost 0.5%. The Nifty Bank is up 0.5%. Let's pull up the small cap and you can see the pain there also. So on the broader market side, yes, there is selling pressure that's clearly been seen. Some of the counters that I want to clearly focus on, yeah, that's a small cap for you, down almost 0.3%. Some of the counters which are bleeding and trading at 52-week low, UPL is at a 52-week low, is down 4%. You have the recently listed Shalby Hospitals, which is trading at a 52-week low, so there seems to be enough selling there. Tata Power has moved to the lowest point of the day, is trading at a 52-week low at levels of almost 69. Some of the counters which are doing well, first of all, and that is at a 52-week high. Mid-cap IT seems to be doing well, and KPIT, L&T Technologies, L&T Infotech, all these counters seem to be doing extremely well for themselves. The other pack is basically some of the sugar stocks which are doing well. You have Balrampur Chini, which is up almost 7%. Let's pull up some of the other stocks and you can see that Dhampur Sugar, it's up almost 0.3% in trade. So the sugar as a pack is doing well in trade. You have Dwarikesh Sugar, which is up almost 4%. So sugar as a pack did well. The other sector basically which is not doing well is the pharma space. So counters like a Glenmark, your Strides, all these counters significantly down in trade. So it's become a very, very strong sector specific, especially that and the mid-cap IT, which has been doing well in trade. Just 9 seconds for the markets to close, and we will close higher, but nevertheless, Neeraj, broader markets is still seeing a lot of selling.
Yeah, we've been talking about this for the last few days, and today is no different. Darshan, it'll be interesting to see the volumes at about 1 p.m. itself, or rather at 1 p.m. the FNO volumes were about 10 lakh crores. Not surprised if Bank Nifty weekly options expiry.
It is.
This would happen, but the cash market volumes 2 days in a row are northwards of 30,000 crores, at least on the NSE, which is probably a good sign. But the market breadth gave away the story, didn't it?
It did, because the decline, you can see that the advance has come down, the decline has actually got down. Look at the Bank Nifty. It was up almost 350 points at one point of time. It's closed at 160, so pretty much half of the highs that it was. So Bank Nifty expiry closing on that basis. Interesting to see the contributors of the index, and you'll come to know that probably Reliance will be the lone man standing that's contributing. Just look at it, out of the 68 points, 36 points was only on account of Reliance. No doubt the HDFC twins contributed, so if Reliance was not there, probably would have been much lower this time around. Infosys ahead of the numbers tomorrow is rather weak in trade. M&M till few days ago was trading at lifetime high. It is down in trade, and Vedanta and UPL continue to disappoint us in trade.
Now, very interesting. Reliance alone accounted for almost all the points lost by the other stocks as well. 38 points contributed by Reliance. The total for all the losers about 38 points as well. Just before we get in, final thoughts from our experts. Bring up the European markets just to show you what the world is up to as well. And the world seems to be an okay place at about 0.25%, though India has been having a dichotomous nature of trade. But Asia did well. Europe is not doing all that bad. Maybe the Dow futures too marginally in the green, maybe. Yes, about 0.5%. The world seems to be an okay place. No big negative surprises from around the globe. Final thoughts from our experts then. And Abhijit, in light of what we've seen today, how would you place your trades for the next few days? Tomorrow is a Friday and we run into the weekend, but what's the trade strategy for the next few days? Abhijit? Okay, I think we've lost him, but Hadrien, if you can hear me, the same question to you. In light of what's happened today, or what's happened over the last 4 days, how are we placed for not just really the rest of the week, because there's only 1 day left, but maybe for the next 5 or 6 trading sessions?
Yeah, absolutely. Both the bank Nifty and the Nifty both have given a wonderful breakout. No doubt that breakout has come on the basis of just 4 to 5 stocks that have run up. But a breakout is a breakout, and you can't doubt it. So the strategy has to be buy on declines. Every small fall that we see in the Nifty should be a good opportunity where you can once again enter a long on a Nifty and as well as the bank Nifty.
Okay, Abhijit, same question to you really. How does this set us up for the next few days? No, I think I'm having a bit of a bad luck with Abhijit Phatak. Nevertheless, I think we'll call it a day. Hadrien, Abhijit, thank you so much, gentlemen, for joining in today and giving us your thoughts. And viewers, thanks for tuning in as well on this leg of Countdown from Darshan and me and Avneet and the team that put the show together. Thanks so much for watching. Have a great day ahead.